Today I want to have a look at a company that is in my personal portfolio, and that company is no other than British American Tobacco, ticker BTI. So I will plug in the ticker BTI into our stock valuation spreadsheet and all the metrics will show up automatically. Now, for those of you who are interested in my personal portfolio, you can go check out the video on the screen right now, which I did a few days ago, talking about my personal portfolio and my investments and the dividend income from a $8,500 portfolio in the month of May. Now, let's get straight to BTI. We can see that they currently pay out a dividend yield of 9.58%, which is a very juicy dividend yield. Now, often when a company has a high dividend yield, it means that their dividend growth is quite low, which would be an issue as on this channel we like the dividend growth, year-over-year dividend growth, to be at least 3% to cover inflation. Otherwise, when it's lower than that, it essentially means that the company is paying you less every single year due to inflation. But we'll have a look at that further in the video. We can see that a 9.58% dividend yield gives us a dividend payout of $2.97 per share every single year, which gives us a trailing free cash flow payout ratio of 43.10%, which is a very nice free cash flow payout ratio, meaning that BTI can invest a lot of free cash flow into share buybacks and overall making their products better. Now on the graph right here, we can see that BTI has been getting beat quite down over the past few years. Now one of the reasons why BTI's prices are soaring is that they are invested into making the world a smokeless place, which is losing them both customers and investors, driving down their earnings and stock price. If we have a look down, we can see that the earnings per share are currently negative, sitting at negative $8.21, which isn't good at all. But as I like to say, it never matters where the price goes, what matters are the business fundamentals. So let's have a look at the 9-pillar analysis and figure out whether BTI is doing well internally. So we can see that the 5-year PE ratio and the price to free cash flow are both sitting in the green. We can see that there is revenue and increasing free cash flow growth over the past 5 years, and that the 5-year profit margin is sitting very high at 83.25%, and also BTI is buying back shares, which is always nice to see. Now there are two pillars sitting in the red, and that is the net income growth and the consecutive dividend growth, which, as I mentioned at the beginning, might be an issue for us. So let's scroll a bit more down to the financials, and we can see, first thing we can see that the PE ratio has actually been negative over the past 2 years. So the nice PE ratio we have here isn't actually that nice after all. We can see that it's currently in the negative. Now the gross profit margin of the company is staying very high and very stable over the past 5 years, which signals a healthy and well-established company. Now we can see when scrolling further down that the revenue has been growing very slightly and that the net income indeed has been falling quite bad, being at negative $14.3 billion in the year 2023. Having a look even further down, we can see that BTI has been buying back some shares, but it really isn't that much, taking into account their low trading price compared to their historical trading price. But now let's jump to calculating the intrinsic value of BTI, first using the grams formula revised. But before we jump into that, if you do enjoy these valuation spreadsheets, you can always download them at my Patreon in the link in the description. Now, normally we would take the trailing earnings per share over the past 5 years, but as the last year has been negative in earnings per share, we will take the last 4 years, which are 2019 to 2022, and when we average these out, we will get an average of 2.79. So we will take that into account. We'll take the base PE, the 5-year growth estimate, the growth rate multiplier sitting at 1.5, average yield on AA corporation bonds, and the short-term average yield on AA corporation bonds, and get an intrinsic value of $56.52, which is 45% higher than the current trading price of the company, hinting that based on BTI's earnings, the company might be slightly undervalued. But as I said before, we aren't taking into account the year 2023, so we have to be a little careful with this one. But now let's move to the next valuation model, which is the discounted cash flow analysis. And here we take the free cash flow of BTI over the past 5 years and calculate the average growth rate to be sitting at 4.88%. Now the analysts do project a growth rate of only 1.53% year over year over the next 5 years, and my projected growth rate will be quite low as well, sitting at only 2% year over year. So we will use the projected growth rate and calculate the future free cash flow over the next 10 years. Now after that, we will plug in our discount rate, which I plugged in at 12%, as I find BTI a bit more risky investment. And plugging in the discount rate, we will calculate the present value of all of that future free cash flow, and then summing all of that up, adding cash and cash equivalents, subtracting total debt, we will get an equity value. And dividing that by the shares outstanding, we will get an intrinsic value of $55.02. Again, quite higher than the current trading price by about $24. But now let's compare BTI to its peers and figure out how it's doing compared to its competitors. So I will take MO or Altria Group, RLX, and VGR. I will take these companies' current stock prices and divide by their current earnings per share to get their PE ratios. I will then average out these PE ratios and multiply by the earnings per share of BTI, which is again the average earnings per share over the past 4 years, as the current earnings per share is sitting at negative 8.21, so we cannot really use that. And using this earnings per share, I will get an intrinsic value of $42.90, again hinting towards the fact that BTI might be undervalued compared to its peers. And now moving to our final valuation model, the dividend discount model. And here we will take the dividend payout over the past 5 years and calculate the average growth rate to be sitting at negative 4.57%. Now what I will do is actually pull up a graph from Seeking Alpha showing the dividend growth rate over the past 10 years, and we can see that over the past 7 years or so, the company hasn't increased their dividends by almost anything, meaning that they are paying their investors less in dividends every single year due to inflation. Now we will take this into account, and based on that I will project a growth rate of only 1.5%, and I will plug in a yearly dividend frequency of 4 as BTI does pay out its dividends quarterly, and based on this we will get an intrinsic value of $74.31. Now it doesn't always mean that when a company has a lower dividend growth rate than the inflation rate that they cannot be profitable over the long term. The money you invest into that company can actually still bring you profit if their dividend yield is high enough, and that is the case with BTI. But personally, I do prefer dividend growth companies rather than high yielding companies. So as I said, the intrinsic value comes out to be $74.31, but now it's time to have a look at our ultimate intrinsic value, which after averaging out the 4 valuation models we just did, comes out to $57.90, which is 84% higher than the current trading price of the company. And if we plug in a margin of safety of say 25%, as BTI might be quite a risky investment, we will get an acceptable buy price at $42.89. Now it is quite likely that over the next few years BTI will not go up in price by much, and that is because of their interest in making the world a smokeless place. And that is before there is a clear long-term growth opportunity in this idea of theirs. Now I do own BTI, but I did my own research in the backend, and I'm certainly not telling you that you should or shouldn't go buy the company right now. You have to do your own research in the backend and figure out whether it would be a good addition to your personal portfolio. With that, if you did enjoy this video, make sure to like and let me know down in the comments which company you'd like me to evaluate next.